We are fortunate today to be joined by, on my left, Andrew Davenport, who is COO at RWR Advisory Group, Sarah Hewin, who is Chief Economist for Europe and the Americas at Standard Chartered, and Frieda, who is Executive Vice President and Global Strategist at PIMCO. We're going to be hearing a fair bit today about the opportunities from Belt and Road, but there are also quite a number of issues that could impact it, including external issues around economics and politics. Sarah was telling me recently that she felt there are both short and longer term issues at stake. And a short term one is obviously the risk of an extended trade war between China and the US. So Sarah, if I can start with you, if you could just let us know how you see that might, if you see that that might play out for Belt and Road, including into Europe.
Yes, I mean, the discussions are ongoing in Washington this week. We may see a conclusion later this month, but the experience that we've had over recent months has been not to hope for too much too soon. So we're not in any sense expecting that there's going to be a conclusion and that the sort of trade situation will be improving markedly. Having said that, I think from China's perspective, we've seen Beijing taking action to ensure that the economy continues to do well. We're seeing some early signs of an upturn in the economy after what has been a pretty poor year on the growth front. How this relates to Belt and Road, I think it really accentuates, from Beijing's point of view, the need to expand, develop infrastructure, develop trade links, build trade links across the world, particularly across Asia, into Europe, into Africa. If we look at China over the medium to longer term, it's going to be an economy which is going to be growing at a slower pace. It's an aging economy. It needs to be able to take advantage of fast-growing young economies, and at the same time, it's going to be a very interesting market. So as you know, if we look 10, 20 years ahead, it'll be the largest economy, the largest middle class, number of middle-class consumers, plenty of opportunities there for trade partners. So we still sort of built Belt and Road in this current context really as being an opportunity for China to ensure that it can continue to grow, and at the same time it offers opportunities for the rest of the world.
Thank you. I know that, Jean, you have some thoughts on this. I'm just going to jump over to you because the question of how much China's own economic health matters with Belt and Road, if it could drive, in fact, expedite more projects for Belt and Road, as Sarah was saying, to improve its own economy. I think we've got a really good chart we might be able to bring up here about China FDI into Europe as well. But Jean, I'm interested for your thoughts about how much China's own economic health could impact Belt and Road.
Yeah, I think it is important, and I think you know, one of the issues right now with China is that you have a number of big initiatives, not only the Belt and Road Initiative, but also the Made in China 2025 initiative, and you know, all of these grand plans have gotten linked together from a foreign perspective. So when you distinguish between the economic prerogatives of the Belt and Road and the geostrategic prerogatives, it's pretty clear that there will be more constraints in the future on the economic prerogatives, I think. When this was initially launched, it was launched in part as a way to export, China's domestic prowess in terms of building infrastructure. And there were questions about how are you going to do this, in an environment where there's greater transparency, where there are greater contractual norms. And the way they got around it is there wasn't greater transparency, there weren't the contractual norms. And I think they've learned from round one of this that maybe that's not in their interest. So there is much more of a focus now on learning, I think, from the first round of infrastructure projects where they have discovered that some of them were not, in fact, economically viable. They didn't necessarily create, more. They might have created more growth in the short run, but they didn't necessarily create more export capacity. And I think learning those lessons will become extremely important as China's own growth slows down. I mean, one of the striking figures is that, investment, it's not obvious in this chart, but investment, FDI from China to the rest of the world has actually slowed down in recent years as a function of that slower growth domestically. And it's not obvious that that'll change anytime soon.
It's interesting you talk about the economic imperative behind Belt and Road, because also there are obviously broader imperatives as well, including political and strategic. And Andrew, I know that that's something you look at. And my question to you is, how much is that a factor in Europe right now? We do see that perhaps under the current US administration, some of the long-standing relationships with allies like France and Germany have come under some pressure. And as the US relationship changes with Europe, does that create an opening of sorts for China?
I think that's the perception that it does from the European point of view, feeling perhaps that whatever distance they feel with respect to their relationship with the U.S. needs to be filled in some way with a stronger relationship with China and an embrace of Belt and Road. I think, with respect to the conversation we were having about the trade deal and even China's own focus on economic issues and reform of Belt and Road, perhaps moderating a little bit about what happened in the first round, I think it would be important to understand, even that if there is, for example, a trade deal between the U.S. and China, that isn't necessarily going to dissipate the amount of tension that is felt in Washington with respect to Belt and Road. The amount of investment I think that the U.S. government and policy community in general in Washington, D.C. has put into viewing Belt and Road and this economic initiative as a geostrategic stroke coming out of Beijing is not likely to go away anytime soon. I don't think, while there may be some impetus politically in D.C. to not be quite as outspoken in certain ways about certain aspects of China's, the geostrategic aspects of China's economic projects, there will be an interest, I think, in getting along and lowering tension if there is a trade deal. But at the same time, the general geostrategic objective, diplomatic objective, national security objective that the U.S. security community feels to pushing back against Belt and Road is going to remain. And so the question will be, how viable will a trade deal with China be from the U.S. over time in light of some of these larger macro trends that I think are going to continue in terms of the way Chinese competition is perceived. I also think it's a little bit of a, you don't want to play too short a game. I think if you're Europe looking at the U.S.-China relationship and the U.S.-Europe relationship. Some of the stresses that may exist today with respect to that relationship may not necessarily exist tomorrow, even under this current administration.
I have one more quick question just on trade, so I'll come back to Sarah or Jean. Is there any opportunity also or challenges for China to get caught up in the wash of the US-European trade tensions? We had a story yesterday, I don't know if we can call it up, looking at how European governments are arguing, I guess, discussing amongst themselves when and how to give a mandate to start those trade talks with the US and perhaps pushing the timetable back in a way that may frustrate the US administration. Is there any impact there for Belt and Road? I'm happy to take either of you on that one.
And I think there's a, there's a sort of clear tension because I think Washington has sort of sent some pretty clear signals that Europe may have to choose between China and the US. So that that's a pretty tough starting point. In addition to the sort of stresses that there are already within the European-US trade relationship and threats of tariffs on auto imports from the EU are weighing pretty heavily on European sentiment. I think there's sort of an additional factor here as well, where you have tensions within Europe relating to China's agreements with individual countries, Italy most recently, but also trade sort of partnerships, cooperation agreements with Central and Eastern Europe, with the Nordic countries, with the Mediterranean group, and Brussels is not really looking upon this in a sort of very favourable light. But for these countries, obviously, it offers the opportunity for infrastructure build and building up trade relations with what's going to be, the largest economy in the world.
Can I just add?
Absolutely.
Yeah, I mean, I think, Europe has not been very successful in delivering growth. China offers money. It's offering, a willingness to buy assets, to invest in projects, which is a positive. So in some senses, China is kind of forcing Europe to up its game, and the US for that matter. Against that, there are some clear tensions that are emerging as a result of those investments. So you can see it, for example, in Greece, in the case of the investment in the Costco port, the port that Costco bought. And ultimately, that is leading Greece to veto certain initiatives that would, let's say, increase the focus on transparency of deals that China strikes with the EU. So I think, again, you can see where there's a potential solution in terms of being more transparent with the deals that get signed. But against that, there's also a risk that inking deals with these countries serves to divide Europe more and makes it weaker overall.
Yeah, Andrew, I want to bring you in on that because we've been talking about that offline. I mean, obviously for countries in Europe, there's the factor of wanting and needing investment and infrastructure balanced against what we're seeing as an increasingly fraught debate about some of the other questions around China, be it around Huawei and security and strategic goals for China. How much do you see the European political mood in countries like Italy and elsewhere where we do see these nationalist winds coming into domestic politics? How much could that be a factor when we look at Belt and Road?
Well, I think to the extent that countries and companies could potentially, in their appetite for investment, overlook some of the strategic aspects of Belt and Road, I think that's a risk. Amidst accepting investment from Chinese banks and investors, there needs to be an understanding that there is a possibility that, in addition to commercial motivations, that there's strategic motivations. And if you sign on to a deal that is motivated primarily by geostrategy and diplomacy over commercial terms and conditions, then you're taking not just potentially commercial economic risks, but also political risks. And particularly, I think, if you're doing so at all thinking about the disposition between Europe and the US, if that, for whatever reason, is altering your risk appetite, if you feel like you have a greater pressure on you to do business with China, because after all, the U.S. is turning its back in some way on you, or at least if that's your perception, I think that's a dangerous calculation to make. Any sort of decision to accept Chinese investment should basically be made at the transactional level for what it is. I think it should be devoid of any kind of idea that, oh my goodness, we need to somehow replace U.S. business with Chinese business, and then overlook what might be China's game plan with respect to some of these deals. Clearly, there are examples around the world of business deals being done for strategic reasons, not economic ones. And we've already seen occasions where transactions have suffered significantly and countries have suffered significantly for accepting deals that may have come along with generous terms and conditions that were not necessarily motivated by independent decisions by banks and companies, that this deal is in the interest of their shareholders. Oftentimes the shareholders is the Chinese government. And you have to discern, I think, on a case-by-case basis, whether or not this is in your interests as a country and as a company and as a bank, not get carried away with the idea that there's some broader symbolism here that's going to result in economic growth, because after all, the result of accepting Chinese generosity is going to be a stronger bilateral relationship. I'd
suggest that RWR has a really fabulous database that I'd encourage you to talk with Andrew about offline. But what does that database show us in terms of China itself? Do we see evidence, and I'm keen to hear the views of the other panelists on this as well, do we see evidence of China modifying its behavior, targeting different types of projects, doing that in a different way in terms of the expectations around Chinese labor or SOE involvement and so on? Have you seen a path where we're looking at some sorts of modified behavior on China's part?
I think yes. I think there is an understanding that they encountered a bit of a brand problem when it comes to Belt and Road over the course of the past couple of years, and I don't know that they anticipated the level of pushback politically that occurred as a result of some of their investments. Our database since about 2012 has basically tracked Chinese business activity globally. We also track the occasions in which these transactions encounter risk, whether it's political pushback or environmental problems, labor problems, corruption problems. So that we can put our finger a little bit empirically on the way in which this agenda has taken shape. I do think that there has been an adjustment. I think there is an interest in softening Belt and Road, greening Belt and Road, to take the edge off a little bit from the pushback that they encountered. I don't think they expected what happened in Malaysia. I don't think they expected what happened in the media with respect to terms like predatory economics and debt trap diplomacy. So clearly, even in their speeches, you can see they're trying to soften the image, and even transactionally, you can see cases where they're seeking to embrace more environmental responsibility. I don't know personally that that's resulted in more transparent, competitive bidding processes. I still think that the general trend and reality of Belt and Road is that it's primarily driving projects that are funded by Chinese banks and contracted to Chinese companies, and oftentimes taking place in sort of uncompetitive, untransparent bidding processes, generally speaking. So I think they have a lot of work to do still to prove that they can take Belt and Road and make it a more friendly, inclusive, transparent initiative. In my opinion, that hasn't happened yet, and that's the risk. That's the category of risk that those looking to be involved in it need to get a grip on and make sure that that trend is going in a positive direction.
I see Sarah and Jean both nodding furiously, so I'm keen to hear.
No, I mean, I think just a quick comment. I think that there is a sort of an acknowledgement, a recognition that projects do need to be commercially minded, and obviously, once if that's your driving force, then that's going to address some of the issues. And also, just a quick comment on Italy. Of course, the Asian Infrastructure Investment Bank is involved there. So you're seeing, in that case, perhaps a little bit of a move away from just Chinese banks being involved. So I think it is evolving, and another feature, of course, is that the initiative does, spark other investment and construction and commerce around the developments that are being funded. So, it is it does have a broader impact than just what's, being decided in those projects.
Yeah, I would just add, I mean, if we were to kind of characterize Belt and Road in a financial context, I think we would probably call it a subprime lending scheme. Basically, they are lending to countries, for the most part, that have had difficulty getting private commercial funding for infrastructure deals or multilateral funding for infrastructure deals. It is probably, for us as a firm, it has made us, all else equal, more cautious in investing in the recipient countries because we are less secure in the knowledge that our own investments won't be subordinated to Belt and Road investments that are struck on opaque terms, often with exports backing in some form, as collateral, those deals. So again, that's a negative. The positive is there seems to be some recognition of that. There seems to be some indication of greater consideration about debt sustainability of the countries in which they're involved. To me, that means there will probably be less money flowing through Belt and Road unless there is a decision, and it might well have already been made, that this is much more of a geostrategic initiative than it is an economic initiative. My sense is that it will go in that direction toward the geostrategic, which means that some of the initiatives many of the initiatives may not actually make commercial sense. So that has to be a point of caution in terms of getting involved in a project that might not be commercially viable. The other point I'd want to make, I mean, it struck me on a recent trip to Beijing, getting a question about the UK at the end of a long discussion, thinking, okay, they're going to ask me about Brexit. And the comment was, we have this channel that we've set up, London-Shanghai Connect, which we haven't actually launched yet. We've suspended it. I'm like, okay, why have you suspended it? Well, because the UK was sailing warships through the South China Sea. As an economist, that really sort of took me aback that link would be drawn, and that kind of retribution for a perceived slight in military sphere would reverberate back on in financial space. So again, I think you have to think quite peripherally in terms of what kind of involvement you want, and I think the hope is that we start to see some shift in how the projects are carried out, and that other investors' interests aren't actually suborned in the process.
Just on this point of trying to figure out, when you're dealing with an economic versus a strategically driven initiative, I do think it's possible. I mean, hopefully this is good news, is that there is diligence that can be done and research that can be done to understand the degree to which this might be happening. So every deal involves different banks and different companies. Those companies have backgrounds, those banks have backgrounds and track records. You can examine the backgrounds and track records of the companies and banks to see what other kinds of deals they've been involved in internationally. Have any of those deals involved controversy? Have any of those deals been labeled in certain ways by certain governments? I can name a number of examples in which that's gone well and not gone well. But the point is that there is information out there. These are not secret deals oftentimes. People are aware of them. The terms are sometimes secret. But you can look at a deal and, for example, even understand what percentage of GDP is implicated by this particular deal. Do the terms make sense because of that? What level of local employment is going to be involved in this particular deal? So you can get a sense of what might be afoot by examining the context of each deal individually. So I would just be careful, not necessarily, I'm certainly not trying to deliver a message that Belt and Road in general should be looked at in a certain lens and therefore broad brushstroke conclusions drawn, but rather because of what is underpinning the initiative itself, some of the policy ideas behind it, it's worth being concerned enough about some of the associated risks to look at each deal distinctly to try to figure out whether or not the strategic motivations behind them might introduce risks that make whatever commercial gains not particularly attractive.
I think also we shouldn't lose sight of the sort of economic imperatives. I mean, I agree with what you said, that but going back to, China over the next 10, 20 years, how the economy is going to evolve, the demographic constraints that it's facing, and the opportunities that there obviously are in other parts of the world, in Africa, where you have very young populations, fast-growing populations, where we have seen a lot of investment going in some cases with debt problems emerging, but in other cases where it has sort of generated, production and trade, which is beneficial to the countries involved as well as to China itself.
But is that the challenge for investors? You were talking about looking at a project and saying, is it economically and commercially driven or strategically driven? In this global political environment, it feels that issues around trade have become increasingly blurred with politics or geopolitical aims, not just under the US, but by China. You see that in Asia with their interactions with South Korea over THAAD, for instance, or with Taiwan periodically. Is that a difficult environment for investors to sort of assess when and how to get into Belt and Road? I'm opening that up to everybody. You can all nod.
I think it is a challenging situation. I do think there is enough, there is certainly a lot of, this has been a fairly mainstream topic. It's become a mainstream topic. As someone who's been looking at this area for about 10 years, I can tell you it hasn't always been this mainstream. There hasn't always been as much context and background and history now to what we're seeing to examine, to try to understand what, if you're looking at, to try to see the warning signs involved in a particular deal. So I do think there's enough of a history now with respect to the way this is taking shape to make educated decisions about individual deals. Certain, Made in China 2025 highlighted certain industries potentially as somewhat more risky of being associated with strategic notions, long-term dual-use related technologies. So it's challenging, to be sure, and the politics of, really the most challenging part is that we're dealing with legal commercial business deals. And I think that's been really difficult for a lot of people to grasp. And for a long time, the government stayed out of that space, is the reality. And it was illicit activity, sanctions, money laundering, smuggling. These are the areas where the government was going to step in and interdict and express an opinion. This is bad, this is illegal, don't do it. Everything else the government sort of stayed out of. I think over the past few years, we've seen even legal commercial business deals be labeled by the government and by the media as raising risk factors now that have to be dealt with. So it's not enough to have a lawyer say, look, this is legal, let's do it. All of a sudden, there's all kinds of other reputational risk factors that need to be accounted for. tricky.
Jean, I know you have some interesting thoughts about when you look at investment opportunities into Belt and Road, not just seeing it as a project-based question or a country-based question, but China itself and the health of the onshore market in China, for example. Can you talk a bit about that?
Yeah, I mean, I would kind of link the two together in terms of, China having many competing policy objectives, several of which are somewhat contradictory or conflicting. So, for example, they want to develop the domestic financial markets. They want foreign investors in. At the same time, they want to control the exchange rate very tightly. They want to control capital flows. They're not letting a lot of money out. I mean, that element in itself somewhat contradicts the notion of we want you to go abroad, but we don't want you to go abroad. So there's an element of certain kinds of things you're happy to have go abroad, but other kinds of things you want to keep at home. To me, that creates a certain amount of uncertainty as to the commitment to a regime. So, for example, in the context of China's inclusion in the bond indices and in the MSCI equity indices, there's been a real concern that there might be a problem with converting, your foreign currency that you've converted into local currency back into foreign currency. Can you get it out when you want to get it out? They've given commitments. That regime is in place. It's operating quite well. But the point is, that when you have these competing political and economic objectives and external and domestic objectives, you're not quite sure when the political objectives, I mean, it goes to Andrew's point about when you're investing alongside a state-owned enterprise that may have, non-commercial objectives, you have to be a little bit more careful. So I think, the more that we can bring China into, global institutions and get them to be a key stakeholder, the better. And so far, where they have come in, I think they've been a very constructive player.
So we only have 50 seconds to go, and I can't tell you how eager the panelists were to answer a question on Brexit. They all were jumping to be first on that one. And we obviously don't really know where Brexit is going. If anyone in the room can tell us what the solution is on that point, I'd be grateful. But thinking through the noise of Brexit into the longer term with a UK outside of the EU structure in some fashion, is there an opportunity there in terms of, if you're thinking about investment in Belt and Road, for China to be a first mover on trade negotiations with the UK, for example, or the UK as a yuan market as well? Do you see any issues there that we could talk about in 13 seconds?
I mean, for the UK, it's going to be services. I mean, that's where the UK has a small surplus with China at the moment, quite a large goods deficit. So that would be the opportunity for the UK in the future.
I think there's potentially a huge opportunity, but a lot of it depends on the trade relationship that the UK strikes with the EU. I mean, this is a tremendous beachhead, for access to the continent. One challenge will be if China is the first relationship, how that actually affects perceptions vis-a-vis the EU in terms of what kind of relationship it's willing to strike.
Thank you. Andrew?
Oh, I would just say that I think what you should just be careful not for any perceived distance with the EU or the US, whether it's the UK and Europe or Europe and the US, not to necessarily change the risk calculus that's being made deal to deal with respect to relations with China.